the market today on March 18th, 2025. And we continued with the sell-off overall. The S&P was down a little over 1%. The Nasdaq down a little over 1.5%, about 1% and 2/3 there. And you continue to see sell-offs in the major tech names, major Mag 7. Tesla down over 5% today. Meta down nearly 4%. Nvidia down 3.5%. Google down 2.2% on a big $30 billion acquisition the market didn't really like. You continue to see Apple as the strongest, only down 0.6% on the day, but really a lot of red, the bigger the company. And the smaller the company, and the more you're in finance or healthcare or energy, the better you did today. And now you did see some weakness in consumer staples. Part of that was the fact that rates were up a little bit, and so they were overbought. They were due for a little bit of a down day. But overall, you continue to see the market being driven into the red by those major tech names. Bitcoin futures were down 2.9%, so continued to weakness. There's definitely a lot of correlation there between the NASDAQ, big tech names, and Bitcoin prices. Gold finished up once again, 1.2%. Gold is just a powerhouse in this market. And you had the dollar index that was down again, but only marginally 0.1% there. Housing starts, those rose 11.2% month over month, well ahead of consensus, which was only 1.8%. So that was definitely a positive there. Building permits, though, fell 1.2%. So they're starting more homes, but they're not planning more homes. And that could be a bigger issue down the line. Or maybe they feel like the home builders have enough permits already pulled. February import prices, they did jump 0.4% month over month. That was higher than the consensus of 0.1% decline. So you continue to see kind of a stagflationary environment that we are in. And that's one of the reasons why this market is struggling a bit. And so you also are getting negotiations with the White House and President Putin of Russia on some sort of resolution, ceasefire to the war in Ukraine. Now, that would probably be a net positive if that comes into some sort of a resolution, but we'll see there. Now, overall, we're still, from a market structure perspective, we're in OPEX. We do have the Fed day tomorrow, so that's going to be a big factor. What do they say? We know they're not going to move rates, but do they start to hint at moving rates in the coming couple of meetings? I think that's likely. Also, what do they say about QT? Are they going to continue to wind down their balance sheet and reduce it? Or do they feel like they've done enough, keep things static, and start to end QT, and maybe even get ready at some point to do QE, right? And so I think that is also something the market will react to. We are in what's again OPEX week. So as you get closer to the end of this week, you typically get a change of direction. The direction right now in the market is down. And so if volatility starts to roll off and change as we go into next week, you can certainly see a bounce in the markets. But this is a market that has a lot of changes underneath the surface. You're getting small caps outperforming. You're getting those harder assets, more consumer staples, durables, industrials, et cetera. Those are starting to do much better than the bigger tech names. And that just continues almost every day. You get slight reprieves. I think you got one the day before yesterday. And that was just one day. And you continue to see a sell-off in those major tech names. So I expect that for most of this year, but it's going to be a choppy year, most likely. President Trump he's unpredictable. 1 minute he can be your friend, the next minute he's your enemy, and vice versa. And 1 minute he wants to put on tariffs, and the next minute he wants to give some exemptions. Okay, and so get ready for that. And that's what a volatile market looks like. This is what a volatile market looks like. So don't think everything's going to hell in a handbasket. Liquidity broadly is still positive, and you have the Fed and the Treasury still having bazookas out there to throw at the market, liquidity to throw at the market to keep things kind of together, at least in the short to medium term. So, expect a choppy market environment going forward, and today and yesterday were just one examples of that.